Welcome back to the What's More podcast. I'm your host, Quinton Harris. You're dialed in for episode 256. Hey, in this episode, we're going to talk about what the Fed must do now the time has come and too many cooks in the kitchen on this episode at What's Your One More. So welcome back to the What's More podcast. So in this episode, let's get right to it. Let's talk about the time has finally come. Jerome Powell has finally woke up out of his senses. At the most recent Jackson Hole meeting, he has said, look, the economy is not as stable as we thought it was. And more importantly, inflation is not running away from us. The tariffs were a one-time hit and that it's not being passed down to the consumer at the rate in which they thought. They're able to get rid of the nonsense that, hey, future inflation is coming and we have to hedge against it. They've gotten rid of the idea of the strong, powerful labor market. What have we been saying on this show for how long now? That labor market is a runaway train and that the Fed has been doing their policy as if they're driving a car looking through the rearview mirror, as my friend Dan Habib likes to say. This has finally come to a head, and it took, way too long for the Federal Reserve Chairman to wake up and say, hey, listen, maybe we're a little restrictive. You think? Restrictive? You're so restrictive that interest rates are still remaining well above the elevated rate they should be at. The spreads in the market to the 10-year yield are reflecting that uncertainty that you're distributing. And in the meantime, the consumers, new homeowners, the construction side of the table where homes are being built, all suffering. And yet, here we are today. Here we are. It is Thursday, August 28th, and we're just now seeing the Federal Reserve waking the hell up and saying, yep, you know what, we might have gone too far. And that's the thing about the Federal Reserve. They have a pattern of doing this, and there's a pattern of behavior to where it's like, we're right, you're wrong. And they have all the data sets in the world, and yet someone like me and friends that I have and economists that I know can all sit here and go, dude, you're blind. Like, how are you missing this? So it'll be interesting to see, because at this point, the markets and everyone have built in a quarter, and they're saying, listen, a quarter is going to happen, but a quarter is not enough. And I think that's the issue here that everyone's debating. Hey, it's great that you understand you've messed up. It's great that you're acknowledging you're restrictive. It's great that you know you've been holding back the economy, but it's not enough. In the meantime, you've got Trump who's sitting back here going, listen, hey, Trumponomics, if you want to call that, right, kind of is saying, listen, we're behind the curve right now. A quarter is not going to get it done. And quite frankly, we need more. We need a lot more. And the question is, can they get more? Is the Federal Reserve going to listen? I don't know. They haven't so far. But I do know this. It's evidence to me that the Trumponomics, when you take a look at, it's based on a couple of different things. You know, it's based on trade, it's based on tax cut, it's based on interest rate cuts and growth around the country, is full steam ahead. It doesn't mean it's right, but it's full steam ahead. And I think the Federal Reserve is going to have to say, listen, are we going to continue to fight this, or are we going to try to make this economy better? And right now, it's been a fight the entire way, and it's not working. You look at the labor force, you look at the labor market, the unemployment rate, it's all going in the wrong direction. And Powell finally admitted at the podium, this was probably the most dovish, depressed Powell we have seen the entire time at that podium. I'm not talking about the podium coming out of the Federal Reserve meeting where he's all my way or the highway. The Jackson Hole meeting that he went to, where he actually divulges maybe what they're going to do for the remainder of the year and talk about policy leading up to this, was probably one of the most dovish and also, I would say, uncertain stance he's taken. You could almost look like he was beat down. He's like, it's just not working. What we're doing is not working, and we need to make a change. And it's about time that comes out in the market. That change is evident and needs to happen. So what does this mean for rates? Well, finally, we're going to see some cuts in the Federal Reserve. Is that going to be an immediate cut to mortgage interest rates? Probably not. Wall Street took to this, and you saw the Dow go over 45,000. You saw the markets roar, because what does that mean? That means companies now will be able to get cheaper money, the potential to thrive, the potential to borrow more, create new jobs, build new products, build buildings to put the new products in. There's all kinds of things that come from making money cheaper. It stimulates growth. But when you're restrictive, it cuts it off. And that's where we've been living for the last 26 months. And it's about time we get out of this position. It's been here way too long. And it's amazing during this restrictive policy that we've had that we haven't had more heartburn than what we've already had right now. And quite frankly, Powell was backed into a corner on this. He stood his line, stood his stance. It didn't work. And in the meantime, Trump's been able to ride this and say, I told you. If you would have done what I said, we would have been better off, right? So it's been that kind of cat and mouse game. But speaking of Trump, let's talk about this. I said earlier on the show, too many cooks in the kitchen. What does that mean? This makes me laugh. So Lisa Cook, who is a Fed governor, is literally being fired by Trump. If you were to read the headlines, that's what it reads. Now, Trump can't randomly fire a Fed governor, but he could force him to resign if they're willing to resign, and she's not. She's actually going to take him to court over this. But the question is, what begs the debate here on the show is why, right? This is one of the funniest things I think I have seen in this Trump administration thus far. That Bill Pulte, who is the director of the Federal Housing Finance Agency, right, the FHFA, literally dug deep enough in the data to find out that Lisa Cook had claimed 2 primary residences within the agencies, meaning that she has 2 homes right now with Fannie or Freddie. Those are the agencies inside of Federal Housing Finance Agency. And then he's claiming, hey, our data says on her applications, she marked both these homes as primary residence. That is what we call occupancy fraud in the industry. Now, just to put in perspective, Lisa Cook is not the first person to ever do this. And to put in perspective that there are many of occupancy frauds in the mortgage world that take place many a times. But to call out a federal chairman on that particular rule and have them fired over mortgage fraud is one of the funniest damn things I've ever seen. Because at that point, you are reaching, right? But more importantly, like, you have to go through the database of everyone else that's kind of committed such things and what's the repercussions there. But maybe it's because she sits in a higher federal government position, and maybe it's one of those things you should have known better. But the reality is this: what happened to all those federal chairmen, chairwomen that were involved with the Federal Reserve that were doing all the bond trading back in 2020 and 2021 when they were trading bonds? You know, on the fact that they're the ones that control the 10-year yield. They control the movement up and down of all the bonds, and they were literally making millions of dollars on insider trading of up and down on the bonds during that time. And to the point to where the end of 21, early 22, it was actually stated, you're not allowed to do that anymore. But before that, you could do whatever the hell you want and make millions of dollars at your own decision and your own discretion. and that you were allowed to keep your job the entire time. No problem with that. But then there is a lady on this particular Federal Reserve Open Market Committee, Lisa Cook, on this chance says, hey, listen, I'm going to file for a mortgage, and then I'm going to get a mortgage later on and claim it as my primary. Now, everything I've read doesn't show she submitted 2 loan applications, buying 2 homes at the same time, and said, hey, both those homes are going to be my primary, and she went to 2 different lenders and defrauded them. That would be a problem. Like, literally, if they discover later on that she did applications within 30 days of one another, and it said, hey, I'm buying primary home, let's just use an example in California, I'm going to get another one here in Washington, I'm going to work with 2 different lenders, and I'm not going to divulge that I'm doing that, and those both close in tandem with one another, yeah, that would be occupancy fraud. I don't think that's what happened here. I think that she probably owned a home. It's a primary resident. Months, weeks, years later, she buys another home in another part of the country, claimed as a primary residence while still having this one over here that she originally started with. That's a common thing that happens all the time. There's not a darn person in the world that goes back to that first loan and says, oh, hey, by the way, I'm not living there anymore. We charge me a higher rate for that. Like, I've got rental properties that I used to live in. Like, that was my primary residence. When I departed that, I didn't call the lender years later and go, oh, hey, now it's a rental home. Will you up my rate and change the terms and conditions because I'm renting it? Hell no. No one does that. And so the fact that this woman's being targeted for that reason, and that's exactly what's happening here, she's being targeted, is it's a bad look to the administration, and it's funny as hell, quite honestly, because it's one of those things where if it's propaganda, where if I just throw it out there, you'll resign because I've kind of made it bad enough for you. And good for her for standing up. She's like, I'm not going to resign. You're going to have to prove that. It's going to be a hard thing for them to prove, by the way. But this is a good example of just too many cooks in the kitchen, I like to say, because this is it's quite silly. I honestly would have liked to see him go back to 22 and reprimand all the people that were doing the insider trading, Raphael Bostic, and go ahead and get those individuals to return the money that they made, the millions of dollars that were made on those trades on bonds when they were the ones going, hey, we're going to lower rate. Oh, let's go over here and, buy some bonds. Let's preactively do some things over here. Let's short some bonds. All that stuff that was being done is absolutely ridiculous on the aspect of they're controlling it and got away with that. It's kind of silly. And then this woman's being judged based on buying 2 homes at 2 different times to get her moved. And we wonder why we got a problem with the Federal Reserve, right? We take pop shots at them, and then the administration asks them to cooperate and do something, and we get no cooperation. Obviously, all that's going to change in May when the federal chairman, Jerome Powell, steps down. But between now and then, I think we're going to continue to see a little cat and mouse game here. Today's episode is brought to you by Texana Bank Mortgage. They're coming to the table with a revolutionary product. It's called REMLO, Real Estate Mortgage Loan Originator. And what they are doing is they are taking real estate agents and they're taking loan officers, and for the first time in history, they're putting them together under one umbrella. They're actually taking 2 industries right now that sit on top of each other, and they're putting them together and backing it by a full-service bank licensed in all 50 states. So imagine this. You're not just an agent anymore. You're a full-service agent. You're the single trusted point of contact for your client in this entire process. You're seeing the loan and the home search front to end. It's going to change the dynamic of real estate and mortgage lending together. Now, if you're a real estate agent, I want you to do me a favor. I want you to go to askaboutremlo.com. That's askaboutremlo.com. Because what you're going to find there are significant details about this program, how to enroll, and how to gather more information. So if you're ready to adapt and thrive, go to askaboutremlo.com. That's askaboutremlo.com. And I think I talked about it a couple episodes before Dan was on here, is that it's actually good for Trump to have Jerome Powell in office, because literally that's his out on everything. And as the economy continues to not be as strong as we want to project it is, it's not strong. I mean, if the labor market is not strong, the economy is not strong, and the labor market is continuing to show signs of deterioration. So we can say it's strong all we want to, but we're not seeing the thriving numbers yet. I'm not saying they won't change. I'm not saying they can't get better, but we're not seeing the numbers, right? And we talked about the BLS report, and I don't agree with that at all as far as it being a legitimate report. But even as far as firing the director from the BLS, saying, listen, your number's wrong. This is terrible. Get rid of her, right? And they did. But the reality is it's still not good. Whether you fired that person and bring someone you like, you're not going to be able to justify and alter and change the numbers to make them look good. They actually have to be good, right? And the unemployment rate is going to have to show up correctly and be better. And it's not. It's getting worse. And it has other signs of pointing to getting even further worse. And I think that's what Powell was mentioning when he got to the podium there at the Jackson Hole meeting. And so things have to be done to correct that. And the only way you're going to stimulate the economy, tax cuts, you can only do so many of that, lowering the Fed funds rate, lowering the money in which we borrow, terms in which we borrow money as a economy, that's going to help. Stimulate housing, that's going to help. Get more construction jobs out there, that's going to help. Have homeowners become future homeowners, buy, sell, move up, move down, first-time home buyers, refinance, stimulate the economy. Those are things that you're going to have to do, not sitting back telling us how great it is. It's going to take more of that. And the actions start with the Federal Reserve and putting more clarity and putting more emphasis on the fact of this is what we're going to do, and not tap dancing around what you think you're going to do, and give more confidence to the damn markets. I think when the markets get confidence and quit guessing what's going on, because we have a very back and forth Federal Reserve, things are going to get better. They're going to get stable. The spreads are going to get better. And I mean, at the end of the day, that's all we're looking for. That's all we're looking for as an economy is stability, and we can build on that. And I think once we get that, you're going to start seeing some things finally be in place that have been delayed far longer than they should be. The things that we're seeing right now are just it's really, it's kind of, I can't really describe it other than the fact, frustrating, pathetic. I mean, people who sit on the Federal Reserve should be here to help the economy. They have a dual mandate, right? Quite frankly, they haven't held up to any part of it. They didn't really do much to help inflation, in my opinion. I think inflation had to work its way through the system. I think they stalled it. I think you could almost say we had stagflation. It was there for so long, it's still lingering around. But now we've gotten to a point where we still have a two-handle on inflation. There's no reason to even talk about it. Even after the tariffs, it didn't jump up over 3.5% as expected. Now you've got to worry about employment. Now you've got to worry about the unemployment rate. And as I said multiple episodes ago, that is a runaway train. Once it starts, it's hard to put it back in the jar. Well, they better get their hands around it right now, because they're in a Top Gun danger zone. And I don't know that a quarter interest rate is going to fix that. 50, maybe. It may take more than that. A lot of pundits are calling for 100. They're not going to get it, but I love the fact that they're calling for it. I love the fact that that's being thrown out there, and I love the fact that it's time for the Federal Reserve to step up. All eyes are on them here in the month of September. My co-host Dan Habib will be back with me right after that meeting in September to talk further about that, the details and the impacts on the market. So stay tuned, because there's some great stuff around the corner. We're finally going to get to the point to where we can start talking about getting from restrictive back to neutral. What does that do for the mortgage industry? What does it do for mortgage interest rates? What does it do for realtors? And what does it do for originators? I don't know. I got my guesses. We'll talk about that on this show and more. If you guys like what you're hearing, please share this episode. Please 5-star review it. Go to YouTube, click and subscribe at our channel at What's Your One More. Leave your comments and feedbacks. We always love hearing from you guys. And until the next episode, we'll see you at What's Your One More.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all